I'm going to go over exactly where I would put $100,000 of capital in decentralized finance right now in concentrated liquidity pools. Let's hop in. So if you guys are subscribed to the channel, you probably know exactly what concentrated liquidity pools are, but the basis of them is you're facilitating trades on decentralized exchanges, the largest decentralized exchange being Uniswap v3. And the reason why we use the largest decentralized exchange is because just recently there was an exploit of $50 million on a relatively large exchange. That exchange was Kyberswap. It was sitting at a TVL of roughly $78 million before going all the way down to just $8 million after there was a $50 million exploit. And that's why it's important to, number one, diversify your capital across different networks as well as different exchanges, but number two, look for exchanges that have the best track record. If we go ahead and we look at Uniswap, you can see that there are absolutely no issues in Uniswap's lifetime. They always put security first, and they always spend over 7 figures getting their code audited to make sure that it's secure. Additionally, the Uniswap platform is very simple to use. There are not a ton of smart contract functionalities. There's not a ton of functionalities in general. You have to use third-party tools. And the reason why it's like that is because that's what keeps Uniswap v3 secure. Whereas when we look at Kyberswap, there were different case scenarios where they identified different vulnerabilities. Like back over here, the Kyberswap team identified a vulnerability. They went from a $130 million TVL all the way down to $25 million. Even though there wasn't any exploit, there was a vulnerability that became aware of, and people did not want to be a part of that, basically. But whenever somebody trades through a liquidity pool, let's just say they trade 1 Ethereum for USDC, they're putting Ethereum into the liquidity pool and taking USDC out of the liquidity pool. As a liquidity provider, you're putting up both Ethereum and both USDC in order to facilitate this trade, and you're taking the counterparty to all trades, in return getting a little bit of a fee. Now, I would personally diversify my capital across 4 different concentrated liquidity pools on Uniswap v3. This allocation would bring me out to roughly a 74% APR, which is not bad whatsoever. And the reason why is because in this strategy, we are focused on long-term growth of our assets, but also earning a short-term yield. That means, number one, we are speculating on the long-term growth of our assets, potentially rising a ton in the future, and we are going to want to retain exposure to those rises. But number two, we are also speculating on a short-term return, which is more foreseeable, I would say, at least in this current market. We know that we're going to get paid fees. The only thing that we don't know, but we can easily predict, is how much those fees are going to be worth. And what I will say about this strategy is slow and steady wins the race. I would rather get a 74% APR without having to worry about my initial $100,000 too much than get, let's just say, a 300% APR, but the chance of my $100,000 going to $50,000 just like that. The first pool is going to be wrap Bitcoin to Ethereum on the Ethereum network, and I want to go ahead and mention that the majority of these pairs will be on the Ethereum network, and that is for a reason. That's because the returns on the Ethereum network are just naturally higher, but there's also more liquidity, which you need to take into account when you are playing with larger amounts of capital. This one would be on the 0.3% fee tier with the range of 16.8 to 19.25. Now, the reason why I chose this range of 16.8 to 19.25 is because it does allow exposure for Ethereum to outperform wrap Bitcoin. So what that essentially means is as the price starts to go down, so essentially as the price of this correlation chart is falling like it has been over the past 30 days, that means Ethereum is outperforming wrap Bitcoin. So essentially that's going to give us less exposure to Ethereum, which is why we want to have a little bit of a buffer between the min price as well as the current price, because ultimately we want to retain exposure to Ethereum as it does outperform wrap Bitcoin. We do that by having a broader range. But with $30,000, we're estimated to make roughly $23 per day. That's roughly $84.25 per year, and that's a 28% APR, which is not too bad whatsoever. As you can see, the volume history is relatively consistent with a big peak volume of roughly $52 million in just one day, but after that it has been consistent ever since. Going a little bit further, we have Ethereum to Link, this one also on the Ethereum network and also on the 0.3% fee tier, but this is doing a lot better than 28%. It's doing a 42% annual return. Now the thing is, having $60,000 allocated to both of these blue chip pairs paired with Ethereum is going to allow us to retain exposure to blue chip assets. That's 60% of our portfolio that isn't super high risk whatsoever. It is just simply blue chip strategies, which is ultimately going to be the security aspect of our portfolio and the more safe aspect of our portfolio. Obviously, there's risk. You have to keep that in mind. But on the other end of things, these are really high returns on something that is relatively low risk in my personal opinion. Looking at this pool, it's a very similar concept to Ethereum paired with wrap Bitcoin, but the thing is we have Ethereum paired with with Link, and we're giving Link more exposure to outperform Ethereum, and that's because historically Link does do better than Ethereum. It does gain market dominance, but that's also just because more and more people are starting to diversify into altcoins. So using a $30,000 allocation, we're initially starting with roughly $20,000 of Link and $10K of Ethereum for our Link to be shifted into Ethereum as the price of Link outperforms Ethereum. But that's a 42% APR, making roughly $35 per day, which would bring in $12,600 every single year. Now, I do want to mention that I currently have an Ethereum to Matic pair open, but this is doing roughly a 20% APR, so I am going to be moving my capital over to Ethereum to Link pretty soon, just waiting on the right time. Not necessarily toast, but it's not doing a good return like it was. It used to be doing roughly 150% APR. Now it's significantly dropped, so I'm waiting to move my capital because there could be an influx of volume, which could lead to better returns. But I do want to mention, if you're new to this Uniswap V3 stuff, I recommend you check out our Uniswap V3 mini course, which is linked down below in the description. For the moment, it's only $35, and you'll get access to over an hour worth of content going over the basics of Uniswap V3 in depth, how to find high-performing pools like the ones that I found on this list, how to pick the ranges for those pools, as well as how to rebalance those pools. Both Mitchell and Ryan and Angela have seen substantial results, with Mitchell now making over $500 per day in passive income. That link will be down below in the description, but we also have another opportunity available for those that want to work with an expert that's been doing this for over 2.5 years, like myself, one-on-one. And if you want to learn more about that, stay tuned towards the end of the video, but also like and subscribe. Going a little bit further, the next pair is going to be Ethereum to RLB. This is going to be the last one on the Ethereum network, but it's also on the 0.3% fee tier. Now, with that being said, this range is going to be broader simply due to the fact that RLB is a more volatile asset, and we do have $25,000 of capital allocated to it, and the reason why is because it still does have good fundamentals. They have a revenue sharing aspect where they take money from their crypto gambling casino and they go and they distribute it to the RLB stakers, but they also use it to buy back and burn RLB token. And over the previous few months, they've been burning roughly 5 to 10% of their overall supply every single month, which is pretty nuts. As you can see, this one does have a little bit of a buffer room, allowing Ethereum to outperform RLB, just simply due to the fact that RLB is relatively volatile, but it also has enough exposure for RLB to continue to outperform Ethereum. Coming in at a 163% APR, a $25,000 investment is estimated to make you $110 per day, which is pretty absurd. That's over $40,000 every single year. Now, with that being said, this also has a TVL of $13 million. And this is a pretty high TVL, but the only reason why this pair does so good because it comes with an average daily fee amount of $22,000, just because the volume is so high and there's so much trading activity behind RLB. And as you can see, that volume history is relatively consistent up until recently. But with that being said, we did see Thanksgiving this past week, so these numbers are supposed to be relatively low. Now, last but not least, we have Ethereum paired with ARB on the 0.05% fee tier. This one is on the Arbitrum network, so you will have cheap gas fees, but I am going to point out a few things that I would pay attention to. Number one, there's a big spike of liquidity distribution. That means as soon as the price moves over to that spike, the yield goes from 75% to roughly 30%. So you need to be aware of that, because if it does go to that price point, then ultimately the returns are going to be a lot less. But for now, the returns are roughly a 75% APR, which means off of $15,000, you're coming in at roughly $30 per day, roughly $11,000 per year. Another thing to note is this allows for pretty much equal exposure of Ethereum and ARB, essentially meaning that they're relatively correlated. They're not going to see major swings where Ethereum outperforms ARB or ARB outperforms Ethereum. At least this range is not factoring that in. But what I would recommend doing is taking a look at the Ethereum to ARB pair over on the Ethereum network. So with that being said, you have to be careful of this pair, and the simple reason why is because it does only have a $860,000 TVL. But with that being said, the assets are still the exact same assets, just on the Ethereum network, lower TVL, less consistency usually. But if we put in the same range, which is 1700 to 2250, we're coming out to roughly a 132% return, which would be really well, almost double what we are getting on the Arbitrum network. So that would take our portfolio from a 74% APR to roughly an 82% APR, bringing us in at $82,000 per year instead of $74,000 per year. So that's exactly what I would do with $100,000 of capital right now. don't just go and copy what I put out in this video. Make sure to do your own research first. And I will say, if you are working with a large amount of capital, feel free to reach out to us. There's going to be a link to the DeFi Accelerator program down below in the description. We have a proven system that we've implemented into over 40 different clients' portfolios, and we average returns of 60 to 80% every single year. As I said earlier, people like Mitchell, Ryan, and Angel have seen substantial success from this program. Roughly 20 days after Mitchell joined our program, he was already making $300 per day. After we implemented optimizations at the end of our program, he's now making $500 per day passively. I can 100% guarantee you that we are better than every single other DeFi program out there. As I said earlier, I had a Matic position doing roughly 160% APR. These fees were just in 4 days, so I made nearly $100 per day from a $20,000 investment off of Ethereum paired with Matic. Going further, 15 days into November, I had a profit loss of $8,000 simply from price action. Tack on an additional $1,400 from earnings, putting me at $9,000 in profit just for the month of November. Here's a screenshot of Mitchell doing $500 per day, 220% APR on his portfolio. We also have Scott right here making $100 per day from this Naka-Matic pair on the Polygon network. We have Alex, which made just over $11,000 in the time span of just a few weeks from Ethereum and Solana on the Ethereum network. So with that being said, we have the results to back up our claims. If you want to get in touch with myself directly, go ahead and head over to the Builder Wealth website for the DeFi Accelerator page, which will be linked down below in the description. Click the book a call button if you like what you see. I look forward to hearing from some of you and potentially bringing some of you guys on board. If you guys enjoyed, make sure to drop a like and subscribe, notifications turned on. I'll see you later. Peace out.